Stock Play of the Day Overtime is an educational program. Any statements made by Ally Invest employees are not intended to be or should be considered investment advice, a recommendation to buy, sell, or hold a security, or a recommendation to adopt an investment strategy.
Hello and welcome to the Stock Play of the Day Overtime Edition. On Monday's Stock Play of the Day, we talked about Amazon. Today, we'll discuss, did we score or did we fumble? Hello, everyone. My name is Brian Overby. I'm the Senior Options Analyst at Ally Invest. On Monday's Stock Play of the Day, we talked about Amazon. We were a little bit bullish on the underlying going into the new year. We did a little bit of a speculative play that was mainly based off of what we saw in the charts. Now, as always on the Stock Play of the Day, this is not meant to be a recommendation, but we saw some good things happen in the chart that we liked over the week. Now, since Monday, we've had a Fed meeting. That was probably the biggest news event for the markets overall. I mean, there is a lot of news out there, so it's hard to determine exactly which one is driving the markets. But the Fed meeting was fairly uneventful. The one thing that the market was looking for, and Mr. Powell, Chairman Powell, came out and basically solidified his view on it. He basically said, and I quote, if an increase in the balance sheet expansion and overall monetary policy is needed, he's happy to do that. And that's the big thing that the market was looking for. And since then, we've we've been bullish on almost all different sectors and industries overall. And I'm going to start by just looking at what happened with Amazon. So this week, really nothing bad happened to the trade. So there's really not an opportunity to go in and adjust the trade. But I'm showing my chart right here, and I'll talk about the lines that are drawn on the chart here. On the bottom, we actually have a fairly solid support line. There's about 3 or 4 times where it has came down and touched and gotten this range. This, as far as this trading day, it didn't quite get down there, but that was kind of the line in the sand. And so we were targeting that with our short put strategy. We wanted to be down in that range, so maybe we could get a little bit of a bounce back if the market did come down and touch around the 2,900 level. But what we're really looking for is we had from this channel and the way that Amazon had been trading, a lot of the FANG stocks have been in a choppy marketplace. Apple, Facebook, Amazon. So a lot of these big drivers during since the downturn of the market in March have now been in a choppier phase, and we've actually seen the small caps kind of leading the way. So what we saw here on the chart was that we had another solid trend line that was acting as resistance to the upside. This candle right here was actually Monday, the 14th. That's when we tape Stock Play of the Day. We tape it at noon Eastern time. The markets are live, obviously, at noon Eastern time. So this was actually that candle for Monday. Then on Tuesday, it came up and it touched that line again, and then eventually it broke out. So that was a confirmed breakout. It finished above the trend line at the end of the day. Stock is now trying to decide which way it's going to go from here. But the next resistance level we have to the top side is up here, right around 30. We'll call it just shy of 3,400. All right. So because of that, what did the trade that we looked at was a short put spread. Short put spread is neutral to bullish on the marketplace. We did it on a short-term basis. We only went out, I think, about 10 days in time, approximately. It's the December 24th expiration, so we only have around 6 days left before these option contracts would expire. We went further out of the money. We looked at the chart. The chart was really the driver of the strikes that we were picking, but strike B is what we sold. The market is trading way up here in this level. And strike A is the one that we bought. And that strike actually gives us the protection. Now, wide strikes in Amazon because it's over a $3,000 stock. So because of that, we had to go 10 points wide. We brought in a credit of about 75 cents when we looked at that trade. So overall, we wanted the market to stay above strike B. Strike B brought in the risk and trade somewhere within this range. If it drifted down, we were okay with it as long as it didn't come down so too quickly and allow us to actually either trade out of it or get some the benefit of some of that time decay from putting this this trade on overall. Overall, Amazon options are expensive just because of the underlying stock price, but we're also in volatile times. So we have increased volatility and we have a very high price stock. So time decay is a big factor in these option contracts. All right, so let's go to the Ally Invest option chains, and we'll just talk about how we would close this trade right now. This is the expiration that we were looking at, the December 24th expiration. Right now, if I scroll to the top, we see that Amazon is actually getting back some of the gains that they've had since Monday. It's trading at 3,000, let's call it 3,200, make the math simple, down about 1% on the day. And this is the expiration we're looking at, December 24th expiration, 6 days away. Inside the Ally Invest option chains, we have the calls on the left-hand side, and we have the puts on the right-hand side. If I scroll down, these were the strikes that we were looking at. So we were talking about the 2990 strike level. So the 2900 level, 2900. So 2990 is where our line in the sand was approximate. So we went a little bit below that. We sold the 2970 and we bought the 2960. 10 points wide, but we're so far out of the money that we did receive a smaller credit for doing this, but we did like the chart. So that was really the main reason why we were talking about it. And as always on the stock play of the day overtime, we're just looking at certain situations where you might use a particular strategy, not meant to be a recommendation when we're looking at these trades. So overall, we put that trade on for about 75 cents. We now see it trading at about 25 cents. So we have 6 days remaining. It would be nice to get the risk off the table. I'd like it to come down just a little bit more if we would. Kind of sad we had a little 1% move to the downside. But if I were to close this trade inside our platform, you can actually do it from your holdings page. But since we're in the options chain, this is all what we would end up doing is the exact opposite of what we did to put the trade on. So in this instance, we have a buy to open. We're going to put this in as a sell to close. So buy to open means we're initiating the position. Sell to close means we're closing that position. And then we had a sell to open on this strike, and this would actually be a buy to close then. And right now we see it at a 28-cent net debit to the account. So at this point in time, with that market at that level, I would probably put in a closing trade and I would try to work that trade overall. So since we're at 25 cents, I wouldn't mind getting out of this at 15 cents. We did it for 75 cents, so we're going to get the bulk of it. But over the next couple of days, if it came down to that level, I wouldn't mind closing it out. Now, as we get closer to the expiration, I'm going to want to cancel that order because if the stock continues on up and you're not filling my trade, well, then I think I'll just let it ride and see if we can capture the entire premium. But to start with, we're going to say I'm going to close it for a net debit of 15 cents. And I would actually put that duration good till cancel. And I'd let that order work for me. And I have that order that's out there. Now, if you want to try to get a little bit more than a dime, maybe you got more than one contract on so that a nickel matters, right? Well, then you could actually put it in a net debit of a dime. So the order would read like this. We're selling to close one of the December 24th, 2960 puts and buying to close one of the December 24th, 2970 puts. We're going to do this for a net debit, and I'm going to say 15 cents to the count, good till canceled. I'd hit preview order, and I'd send that to the floor, and I'd let that work at this point in time. So short and sweet, because it's always simple if the market does what you are hoping it will do. This Monday on the stock play of the day, we'll be back at noon Eastern time. So please click subscribe and ring the bell. And thanks for coming, everyone.